This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Welcome to the show. Just about every show, I tell you this show is going to be different than the last show. Well, this show is totally different than the last show. In fact, we are going to talk cryptocurrencies. Yes, hold the applause. I think every other comment in this section is cryptocurrencies this, don't do stocks, do crypto. Well, we're here to tell you that you might want to consider both. So while many people listening probably want to hear a clash of the titans, crypto versus stocks, we're going to kind of show you why you might want to look at both of these and pick which one's best for you. So we have two gurus. We always have Andy Tanner as our stock representative, but this time we're adding Jeff Wang, and he is the guru for the Rich Dad Company. He actually provides the content, I'm going to call him picks, but also the education in the Rich Dad newsletter. So just to give you a little, what am I looking for? A little advantage to you. There is a link to Jeff's newsletter in the show notes. And also there's links to Andy Tanner's training, a lot of it free in the show notes. So make sure you take advantage of that. Last thing I want to talk about before the Clash of the Titans hits is very often we're seeing this in the comment section, these magic bullets. Hey, don't learn this, don't do that. All you need is this special software and it'll do all the work for you. And forget learning, use this software. It's a bunch of BS. I think we all know it's a bunch of BS. We know education is the real magic bullet, but I did want to address that there's some company that's putting some bots in there. They're just messing with the comment sections. And I just want to first tell them to F off. And second, I just want to make sure you guys know that's not us. That's complete crap. So with that, let's introduce Jeff Wang as our crypto expert, Andy Tanner as our stock expert, and welcome to the show, guys.
Thanks so much. Thanks so much. Jeff, good to have you here. And Greg, as always, it's good to be with you.
I appreciate it. So we're going to start with Jeff since he's the new guy. And Jeff, can you just give us a little of your background and then kind of explain blockchain and crypto coins?
Okay, how much time do I have here? I'll try to keep it brief.
3 minutes.
So I'm Jeff Wang, part of the Rocket Fuel team. We're an investment group. We've been investing in different projects and startups in the space for the last couple of years, probably around 40 or so startups, actually. We started thinking about how do we get more deal flow? How do we kind of make sure our knowledge and our information is more democratized, right? So we formed a newsletter group. We have monthly newsletter, we have weekly videos to try to educate other people. It also helps us interact with startups to kind of let us know, like, hey, we're in it for the whole space. We're not in it just for the money. And to kind of explain cryptocurrency and blockchain, you got to think of it like as a computer that everybody can interact with, but nobody actually owns. And like Bitcoin itself is just really a table, a record of something that everybody can touch, but nobody actually can destroy or change. Unless it's your personal, we call it wallet. If it's your wallet, you can send money from it and you can receive money from it. And then what happened later was Ethereum came out of nowhere and added a programmable layer, meaning that you have a computer that you can program apps on. You can generate coins on it. You can create decentralized finance on top of it. And this is what is exploding in the last actually in the last year alone. Ethereum is up like 13x, right? So blockchain right now is evolving from a decentralized currency into a decentralized kind of finance and application world. And we can talk about it on this show, but it's really crazy, really fun as well.
Great. Thank you, Jeff. And I do want to add, because you're being a little humble here, Jeff's been on the Rich Dad podcast with Robert Kiyosaki quite a few times. And Robert said, Jeff is my go-to guy for crypto, which is why Jeff is part of the Rich Dad newsletter, working with Robert to make sure that we're giving the best education out there. So I don't want you to be too humble here, Jeff. With that, Andy Tanner, how you doing?
Greg, I couldn't be better. Things are fantastic. So I'm just ready to get rolling.
Cool. You know, one thing that's really cool is Andy and I are both here. We're both going to learn more about crypto ourselves. And Jeff here will be learning from Andy's genius. So while everyone's talking about their own specialty, we're learning at the same time, which is really the philosophy of Rich Dad. It's really always be learning, never just sit on your laurels. Robert always says, what you've accomplished today doesn't matter. It's what you do tomorrow. So I just really appreciate you guys being on the show as students and as educators.
Well, I think, Greg, you used that term genius pretty loosely there. I don't think I've ever been mentioned in the same sentence as genius. So you set the bar a little high for me, but I do like simplicity, and the way I approach things is pretty simple. So probably for my simple mind. So this will be a fun discussion.
Well, great. Andy, I'm going to ask you a question. Then Jeff, you might want to kick in on this. But I just saw a graph not too long ago that showed the comparison of Bitcoin with gold. And I know, Jeff, you probably, Bitcoin is all people want to talk about crypto, and there's so much more to it. But this particular graph was Bitcoin versus gold, and how Bitcoin was really outperforming gold. And the reason I bring that up is Robert really is expecting the dollar to die. Really, he's expecting a slow death of the dollar as inflation increases. So Robert buys a lot of both. He buys gold and he buys a lot of Bitcoin. And just recently he told me that he's starting to buy less gold and more Bitcoin. So I was hoping maybe, Jeff, you could explain how Bitcoin is a hedge to the dollar, and if either of you have any wisdom why Bitcoin is favored over gold, I'd love to hear it.
Yeah, the cool thing about Bitcoin is there's no country behind it. There's no peg. There's no world reserve. I mean, some people that are really into the space consider it as like the world reserve currency, because it truly is like decentralized, right? And what happened is like there's the US dollar is one thesis. The US dollar is decreasing over the last couple of years, either because of the pandemic, either because we're printing a lot of money, or creating debt. But really, that's just one thesis, right? In reality, other countries all have access to Bitcoin, and especially in high inflation countries, people flee to Bitcoin because all you need is a website or internet, and you're able to get Bitcoin, right? So people are just like dumping money into Bitcoin, and that's one thesis, is like it's a hedge against the dollar. Of course, in my opinion, I think there's another thesis where there's innovation on the blockchain space, and that's also driving what's going on with Bitcoin as well. So from a simple answer, you could say that Bitcoin is indeed a hedge against inflation, because there's no dependency on any other currency and it's a fixed supply, right? But the other thesis is like where the technology is applicable in the real world.
Great, that makes total sense. And Andy, similar question to you. We've seen the stock market hit all-time highs, and so I guess I'm curious: is that what Robert would say because of the inflation, or is there greater value in the stocks themselves? What's going on in the stock world?
Well, I think I would back up a little bit for this conversation and talk about the difference between the investments first and what they are. I think the wrong way to approach this for a new student would be to say, here's my asset classes. I have real estate, I have business, I have stocks, I have commodities, I have cryptos. Which is best? And I think that's a really big mistake, because they actually do different things. I have all of those things, every single one of them. But as I look at my financial statement, the purpose behind which I'm buying them is much, much different. So let me give you an example, and I'll start with gold. Gold is something that I have, and when I buy it, I don't trade it. In other words, I'm not really excited about the idea of trying to look at a chart, perform some kind of technical analysis, rely on global fundamentals for fundamental analysis, considering currencies and their possible devaluation, to try to buy gold low and sell high. That's not trading. Gold to me doesn't make any sense. Gold to me is exactly what Robert says. It's a way to put wealth in something other than a dollar if I feel the dollar is at risk. And so, gold doesn't make anything. It doesn't produce anything. It doesn't, it just sits there, right? You could use it as somewhat of a consumable, I suppose, but it's a commodity. A stock is much different. A stock is a business where it produces cash flow. Does that make sense? Gold will never pay a dividend. I can't have gold go up and down and up and down and up and down in price, but also pay me a dividend, because it doesn't make anything. So I don't like to favor stocks over real estate or Bitcoin or anything else. I just think they're different vehicles. And I would also caution people to be warned of dogma. I'm not a stock advocate. That's really important to understand. I'm an educator. I don't advocate for people to get in stocks because my logic and my experience tells me that there are weaknesses in stocks as an investment. There's weaknesses in gold as an investment. There's weaknesses in Bitcoin as an investment. There's weaknesses in business, in real estate. Every single one of these has things about them that a person would need to know. And there's a quote that I just love from Steve Jobs that I keep on my wall. It's down right now because I was painting. But it says, don't be trapped by dogma. Don't let someone's promotion of an asset be dogmatic and say, well, this is good because I say it is, and it's the best one. Be very careful. I never bash an asset class because I can find people who have made millions in gold and lost millions in gold. I can find people that have made millions in Bitcoin and lost in cryptos. I can find lots of people who have made millions in stocks and lost. So to believe that your success is a function of the asset class is false. Your success will be the function of the investor. In other words, Buffett wasn't made by stocks. Buffett was made by Buffett. It makes sense. Robert wasn't made by real estate. It isn't real estate that made him rich. Robert made him rich. So I think success is a function of the investor's discipline, temperament, and education rather than what asset class they choose. So I would frame this conversation, first of all, is if you say which is better, real estate or crypto or business or stocks, I think we're already in a context for failure. A person has to be very smart and realize there are weaknesses to all of these assets, risks to all of these assets, and your ability to manage those risks is more education driven than advice driven. Advice is go buy gold, go buy Bitcoin, buy stocks. That's advice. But education is, here are the challenges with Bitcoin. Here's the challenges with gold. Here's the challenges with stocks. And that's how I'd frame the conversation. At least that's the way I feel about it.
Well, then, Andy, do you want to list maybe some of the benefits to the stock market investing and maybe some of the dangers of it? And then
I'd
we'll
almost
have
like to
Jeff
start
do
with the disadvantages.
All right, let's do that.
One of the problems with stocks is they can become detached from fundamentals very, very quickly. And what I mean by that is if you were to look at the S&P 500 as a box that cranks out cash, that produces cash, not in terms of capital gain of its prices going up down, which is the context of most gold and Bitcoin guys. They're like, okay, the price of Bitcoin will go up or the price of gold will go up. That is not the thinking of a stock investor. I'm going to buy this box. The price of the box may go up and down, but how much dividend and do they divide these earnings out? So we have this thing called a price to earnings ratio. Okay, I don't think gold has a price to earnings ratio because it has a price but no earnings. So if you look at the S&P 500, traditionally since 1875, 1880, the mean has been about $16 a price will get you $1 of earnings in the S&P. It's a Shiller weighted, PE index. Today it's at 37. So where traditionally we pay $16 to buy a box that'll produce $1, now we're paying $37 for the same box that produces $1. And there's only been one time in the last 100 years where that's happened, and that's the bubble of the dot-com tech bubble, where they weren't earning any money. So you're just paying price for companies that were vaporware. So I think that's a real big risk, is a person needs to understand there can be a vast detachment from fundamentals. A good example is GameStop and all the Reddit foolishness there. Is they say, well, these guys are in a short squeeze, let's buy it. But fundamentally, that company's not worth $39 billion of market cap. If you took all of GameStop's assets and sold them and paid off the liabilities, you'd wind up with about $400 million. So it's tough to have a $39 billion market cap on a company with a balance sheet's worth, their book value is 400 million. So that detachment from fundamentals can happen, and it happens in gold and it happens in Bitcoin because a frenzy happens, and it's based on supply and demand of the item rather than the underlying value or production of that. So that'd be a big warning I'd give people to go short. What I like about stocks, and Bitcoin's coming along with this, and it's not the best place to be right now in terms of puts and calls, because they're very widespread, it's very risky. It's in its infancy still. But the thing I love about stocks is I can use options to hedge risk. With gold, if I buy the physical gold, you got to decide whether to buy or sell it. That's why I just buy and hold it. Same with my Bitcoin. I buy and hold my Bitcoin. Someday you'll have some derivatives. Right now there's GBTC. I bought a bunch of that about 17. It's like 100th of a Bitcoin. But someday that will be optionable, and I'll be able to use my risk management strategies and also my cash flow strategies in the paper asset derivative of crypto. But it's still traded over the counter. It's still not established yet because it's in its infancy, but it'll get there. Why did I buy it now? Well, if I decide I want to sell calls on that derivative of crypto later, I want a cost basis of $17, not 50 or 100 or 300. So it's a big conversation, but when you're buying a stock, you're buying a company. Why does Warren Buffett like companies more than perhaps gold? Well, because gold doesn't produce. Apple, Tesla, technology companies, pharmaceuticals, they produce things, and you're always going to beat gold. You're going to beat gold every time, cash flow wise, because you're producing stuff. But you can't beat gold very often as a hedge, and it'd be difficult for crypto. So, and I poke holes in crypto a little bit because I've learned from stocks. If I can't poke holes in my own asset class, I don't know much about it. So when I meet someone that says, "Oh, stocks are great, there's nothing wrong with them," I already know he's an idiot. If I see someone real estate's great, there's nothing wrong with it, I know he's an idiot. And if I say someone crypto's, nothing wrong with crypto, it's a safe bet, it's perfect, then I know they need more education.
Gotcha. Thank you, Andy.
Yep.
All right, Jeff, similar question for you. The pros and cons, not of Bitcoin, but of crypto coins, kind of the whole genre or the whole universe. But also Andy brought up fundamental and technical. And I'd like to hear if that's, I guess, techniques that you use in your crypto investing.
Yeah, definitely. So first of all, totally agree with everything Andy's saying. Crypto actually has way more negative aspects of it, mainly because it's so immature, right? Stocks are so mature that there's a lot of regulations around it. There's a lot of metrics and fundamentals behind it. Crypto is just completely wild, wild west right now. Nobody is really policing it. Anybody can really start a coin, put it on an exchange immediately, add liquidity to it, and have it instantly be tradable, right? This is actually a new innovation in the last year. And there's really nothing stopping it. So basically, that danger of somebody saying you should buy this asset is happening all the time now. So like Elon Musk can tweet, "Buy Dogecoin," and all of a sudden it's going to jump 10x, right? And that just doesn't make any sense. And that's one of the bad things about crypto, is that number one, there's a lot of media interference. Number two, there's like not that much well-known fundamentals behind it. And it's just so speculative that really you can think of crypto as like the overflow of the stock market and gold and real estate having no more yield, right? So they overflow into other assets like crypto. That being said, though, crypto is still a lot of asymmetric information. So people entering crypto now really only focus on Bitcoin or whatever the media tells them, right? Like Dogecoin, for example. And what's cool about that is it gives you a great advantage if you're educated. So you can think of Bitcoin as like Apple stock, right? And if everybody around you is only talking about Apple stock, but there's a whole other world of options trading and hedging, and there's other stocks out there you can buy, and the details of the technology and the applications or the usefulness of those other stocks, you're at a huge advantage over the rest of the world, right? And that's kind of what's happening now. I hear everybody talking about Bitcoin, and it's as if everybody's only talking about Apple stock and only buying and holding Apple stock, but there's just so much behind it as well.
I think people ignore crypto at their own peril, Jeff. I really love Robert's idea of looking at three sides of the coin. And Robert and I agree a lot of the time. We disagree a lot of the time. And I really like to look at two sides of the coin. This is why I think you ignore crypto at your peril. What is money? If you talk to a dogmatic gold guy, a gold bug, like maybe Ed Griffin, gold is money. Gold, Maloney, gold is money, end of story. That's the dogma. Well, that's not true. Seashells used to be money. Tally sticks used to be money. Gold, perhaps, used to be money. You could make a case that in 1971, they say cash is no longer money because it was detached from the real money, which is gold. But you could equally and absolutely make the argument that gold stopped being money in 1971 and cash became money. See that? So if the future of money is crypto, and it may or may not be, you ignore those changes. A person that understands the change from seashells to tally sticks has an advantage. The person that understands the shift from tally sticks to gold has an advantage. The person that understands a possible shift from gold to cryptocurrencies as a way to do things. A lot of reasons: decentralization, I can't take the gold with me on the plane. I can get on a plane right now and my Bitcoin's still mine. The transferability of it. There's some big things. One of the things that I'd like to ask Jeff about is the idea of obsolescence risk. I'd like to know this. You guys remember WordPerfect? Jeff might not be old enough to remember that. Do you remember that, Jeff? You're probably like 5 years old.
Yeah, it's probably a while ago.
WordPerfect was the first word processor, and it was billions. You remember Netscape by chance?
Yes.
Okay, Netscape was the first browser, right? Quattro Pro was the first. When you have the first round of a new technology, we have HTTP for internet, and we have SMTP and different protocols. The first one that comes out is Netscape, just huge. But what happens whenever you deal with technology is AI, things are going to get better. Is it possible that Bitcoin is the Netscape, WordPerfect, and Quattro Pro of crypto, and that it has obsolescence risks just like these others? And should I be looking beyond that as a futurist, saying, look, if technology changes exponentially and AI assists that graph going up, do I need to think about obsolescence risk with crypto like Bitcoin?
I definitely think so personally. In fact, crypto, you can imagine, with all these thousands of coins, are actually mini startups that are kind of asking for funds, creating something new in the space. And I think we haven't really touched on the application of what's going on with cryptocurrencies and the blockchain apps that they're rolling out recently. So for example, in the last year, automated market makers was like the biggest innovation in blockchain in the last year. And that was the ability to deposit liquidity or coins into a pool and have it be traded automatically. And the price is set from external factors. Now, this created a decentralized exchange. So people didn't need to log into something with an email account. All they needed is their wallet that you can just generate on the fly, and you can just start trading. And the question is now, like, okay, that's great. Is it a big deal? The answer is, number one, yes, because the volumes of the decentralized exchanges are actually getting very close to the centralized exchanges now in the crypto space. And the second thing is there's actually assets of value being traded on the blockchain now. So people are using various methods of collateralizing assets and then transforming them into synthetics. So you can actually trade Tesla stock or Apple stock directly with your wallet on crypto, right, on the blockchain.
Jeff, why don't they use blockchain technology for voting? I think that technology could be applied to so many different areas in legal contracts, agreements, beyond just the exchange of value. I would think that blockchain would be a fantastic technology for elections. Is it because it'd be too good that they don't want to use it? The Russians probably don't want to use it.
There's definitely a product market fit issue now. And that's like, there's a high switching cost to traditional ways of doing things, traditional databases, into this new kind of distributed ledger or shared database, right? That nobody owns, but everyone can touch, right? And that switching cost is preventing a lot of things from happening. And there's just like no education in this space. If I ask anybody what is a distributed ledger, they're just gonna be like, what are you talking about? Where do I save this file, right? But really, it's like, no, that's not how it works. Everybody has control of this table, but nobody actually owns it. And that is really powerful, right? But it is going to require like a very long transition. I don't see distributed ledgers like happening very often for another couple of years. But the value is there, like you said. For elections, it totally makes sense. But good luck trying to convince any local government to switch to that system, right?
So speaking of that, here's another question I have. I was in Argentina not too long ago, and they were fleeing to two things: US dollars and Bitcoins. And simply because their inflation situation is unreasonable. There's a lot of South American countries that, don't trust their government with their own currency. So they either flee to the US dollar or Bitcoin. Knowing that sovereign nations like to be sovereign, they like to have power. If you're the Bank of England, or you're the European Central Bank, or the Central Bank of Japan, or whoever, the Fed, how excited are you about a decentralized currency in the world? And does the governments of the world, are they saying, okay, we got to get control of this by either taxing it, or if you're an MMT person, then you kind of want to live in a communist country where the government says, look, the reason the US dollar is money is because we say so. We'll print them. We'll give them to you in the economy, but we require them to return through taxes. We don't accept gold. We don't accept Bitcoin. We don't accept trading in your shares of stock. You must have a US dollar, and we will tax you. That creates demand for it. So in other words, right now there's demand for gold because maybe people think it's valuable. There's a demand for stocks because people think it's valuable. There's a demand for crypto because people think it's valuable. But with MMT, they say, no, money's valuable because, or the dollar's valuable because that's all we take for taxes. And if you don't give it to us in dollars, you can have your crypto for a while, but you're going to have to change it to US dollars. There's a demand for that because we literally demand it from you. If we want to raise the value of a dollar, we'll raise taxes. And if you don't pay them, you go to prison. Any thoughts on that?
I think in the next decade, we're going to see a transition of countries creating their own digital currencies backed by blockchain. And most likely the country is going to control the nodes. Obviously, like China is the first one to do this, right? They're piloting.
They're already, yep.
Exactly. UK is proposing it. I believe Sweden is also proposing it as well. And there's going to be this like decentralized-ish framework of different digital currencies that represent the country's currency that can be converted and flipped, just very similar to what we just talked about, right? You have these liquidity pools, you can switch the coins around. And that is going to happen in the next 10 years. And the question is, what's going to happen with the US dollar as a reserve currency? That I really don't know. This is a very, very interesting question, right? If everybody converts to a easily trackable, easily shared ledger of digital currency, and that becomes more legitimate than the US dollar, then what happens to the US dollar, right?
And then you get into SDRs because you have that problem with currencies anyway, right? You have francs and euros and all the stuff we used to have, right? Swiss francs, Polish zlotys. Well, the International Monetary Fund says, well, let's pool these together and create an SDR, a special drawing right, which is a form of money that the average person probably doesn't even know exists and doesn't really have access to. So I'll just say it again, I'm always an advocate for education. People ignore crypto at their own peril. When it first came out, I rolled my eyes. This is, oh, hell, here we go. I read an article, Jeff, on crypto years ago about a strip club in Vegas. I think it was called the Legend Room, that created their own crypto, and they had QR codes on the dancers' shoulders and ribs where you could just click it, get a lap dance on it. I thought, okay, if a strip club can get their own crypto, this is garbage, Since then, I've changed my position. I think you ignore crypto at your own peril. I'm serious enough that I've invested in it just because I know it's a thing. It's going to get bigger, not smaller. And it's a major part of my study right now, Jeff, because it's so new. Where do you find a guy with 35 years experience trading crypto?
Yeah. There's one cool, like we keep talking about crypto as currencies, but yeah. We should think more of it as ledger-based applications. So for example, we've heard of NFTs, non-fungible tokens, which is kind of like cementing your ownership for a certain unique asset. But you can also kind of think of it as, here is an ability to give you ownership of something that is widely accepted as valuable. So let's just apply it to like real estate, right? Let's say we have a commercial real estate property. I want to raise funds for it. I need $100 million to build this, I don't know, set of apartment buildings, right? So what I can do is say, you guys fund it, the 100 million, the ownership is divided into these tokens, these like percentage ownership of this whole thing we've built. And then the revenue that comes through it goes to the percentage ownership of the tokens. And again, you don't even need a bank, right? You can do this all on like Ethereum or other blockchains and distribute the funds that come in according to the ownership. And that's completely, could be anonymous as well, right? So things like that are coming up. Like even entire projects are anonymous devs that are funding each other to build these projects. And that's just unbelievable. Like this kind of application could never have happened in the past, but it is happening right now. It's just like happening right before our eyes this past year even.
I love
that's
that
incredible.
concept.
Hold on, Andy. Like you guys are blowing my mind. There's so much information going here. It just shows the value of each of these gentlemen having their own training, their own education, and the need for it. So again, go to the show notes. If you want to learn more about crypto, you want to learn more about stocks, it's in the show notes, because I'm sure the listeners, the viewers' heads are about to explode just like mine.
Yeah, that's probably my fault. I'm supposed to keep things simple, but I love the context shift that Jeff just made, though. I don't hope no one got lost on that point, because the currency is something I use to purchase things. How much currency do I keep in my checking account? $10 million? No, I don't need that in my checking account. I need enough to pay my bills. And while certainly crypto is used, I bought a Papa John's pizza for my kids with crypto the other day. Certainly it can be used as a currency, but I think it's treated much more like an investment than a currency. I think most people that buy it are not buying it to fill their checking account with something they can pay their bills with. There's some of that, but I think people look at it more as an investment than a currency. And I think Jeff's reframing to think this is not just a digital dollar. There's technology behind this that needs to be learned and investigated.
Jeff, were you just saying that you could use crypto just like shares, very similar to the stock market shares?
I would say crypto's more closer to venture capital, meaning there's a lot of extremely speculative startups in the early phase, like even pre-seed, right? And you're able to kind of buy into these projects. And then it could go to zero, it can go to 1,000x. Any outcome could happen across thousands and thousands of different coins that are coming out. But to the point I was making earlier, crypto, or I should say blockchain, could also be used as like a verifiable transaction, percent ownership of another asset. It doesn't have to be a company or a coin. It could be tracked. There's just so many applications of it that are kind of lost in translation because everyone's focused on, is this a currency? Is it going up in value? And how do I buy it, right? So I just wanted to kind of add that point out there.
But you also said the challenge with that is, like I mentioned, the voting, it takes time to convert and to establish those types of technologies and to attach existing assets to that technology, right? There's an expense to that.
Yeah, and I think there's a lot of issues with, what are the rules around crypto or like blockchain, right? Who's liable for something going wrong? And then there's also like the performance. Like right now, blockchains are slow. Bitcoin can only do like a few transactions per second. And then you actually need like thousands and thousands of transactions per second if you really want it to be a real currency, right? And then again, there's just so many like anonymous people and then nefarious people in the space as well. So like all these things are happening and you're not really sure what's good, what's bad, how's it regulated, who's accountable for what. So you just gotta be careful of that stuff as well.
Do people make money trading Bitcoin or holding Bitcoin? I mean, am I right when I think that it's a lot like gold and that it's something that's going to be traded, it's not going to be cash flowed?
Right now, it's more like you hold it and you just wait. And then some people, like Bitcoin, again, is kind of, in my opinion, it's boring because there's not much you can do with it. It's just like you have it or you don't. You can mine it or not. If you build infrastructure around it, you can actually earn the dividends on it, right? But all these other assets are getting increasingly complex. For example, there's like borrowing vehicles now where I can lend an asset, right?
And loaning vehicles, right?
Yeah. And then people use it to borrow it at that interest rate. They pay that lender, and then sometimes they could buy more of the asset, or sometimes they actually, for example, if I don't want to pay capital gains on Bitcoin, I can lend it to you. and then I take the loan and buy a house or something, right? And then basically keep the Bitcoin there, just waiting. So there's all these things coming out, all these services that are like interesting, and there's like value, there's a product market fit. But we still are just like, this is like just happening in this last couple of years, right? And we have no idea how it's going to turn out.
All right, so gentlemen, we're going to close the show out. This is crazy exciting, and obviously there's so much more to explore. So Jeff, will have to have you back on. I challenge the audience. You heard a lot of stuff today. Just think about one thing that you really learned today. Again, go to the show notes. If you want to learn more about crypto, Jeff's link is there. If you want to learn more about stocks, Andy's link is there with some free courses. Shoot, take them both. But I will tell you, the one thing I learned is that you can use crypto to get lap dances. That's the most important thing. So
I
thank
don't
you all
know
for
that you
listening.
still can. That might be obsolete. I don't know. I don't have a membership, so.
Andy, don't ruin my dreams, man. All right. Thank you all for listening. Andy, Jeff, thank you for joining, and we really appreciate all you shared with us.
Thank you, Jeff. Thanks for the information. Thanks for having us, Greg.
Yeah, thank you guys. Bye.
Bye.